market morning prep video for Wednesday, October 15th. Another reversal in the markets across the board. Although we did finish pretty much unchanged, Dow Jones was down about almost 6 points. Nasdaq ended up eking out a gain as well as the S&P and the Russell. But we did have a reversal right around lunch, or pretty much right about 12, 12:30. Markets just started making lower lows and lower highs pretty much most of the day up until the end of the day. And I'll tell you, the energy sector just continues to get walloped. I mean, we were down almost 5% in crude oil, which is not helping the markets as well because we're heavily weighted in the oil stocks, oil services, the drillers. So there's a lot of oil stocks in the S&P, and that's putting a big weight on in any type of bounce as well. So not a good day. Yet again, every time the market continues to try to recover off the lows, at one point the market just gets sold into again. So we have to keep an eye on that because if we can't even bounce here, at one point I think the market's going to give it up again, and we're looking at some further downside without a bounce here. So I am looking for a bounce because nothing just goes straight down. We've been down now pretty much 2 weeks. We did have an up day, down day, up day, down day, where markets just have no memory, which is also not good. But we just got to keep in mind, keep everything in perspective, the bigger picture here, that we are making lower lows and lower highs, and we do not want to catch a falling knife. So when the markets are up in the morning and really not going anywhere, I mean, we haven't gone anywhere the last couple of days, although it looks like the price action was subdued, but it really wasn't. We've had some volatility, not good volatility, if you will, in the markets intraday, where you see the tick readings up 700, 800, and then turn around at 1 second later, and they're reading in the flat line down 300, 400. So there's a lot of noise in the markets right now, and that's something that you just want to take a step back and just wait until you see better price action. The indicators that I've shown you in the last few days are calling for at least a retracement rally back up to some certain areas where we can actually get short the market. And that's what I probably would be looking to do until, obviously, once that retracement rally begins, we're going to just monitor the volume and see if it's a weak rally or there might be something behind it where, hey, maybe we might start going up, and that was enough, that 6% correction off the 2014 and a half high in the ES is enough. And we don't know that until it happens. But what I can tell you is that there's a lot of selling going on every time the markets start to bounce. So we need to really keep an eye on this. Okay, so let's go right into the index, and you can see the ES daily chart here. We had a downside target of 885, 1900, literally just slam right down below it. Now we're below it, which is now resistance, and we got to take a watch. We got to watch here that we just don't take out the lows, and that 1862 and a half really we have to keep an eye on, because if we do start taking that out on volume, as you can see, we've had many distribution days. Then you're going to get a big flush into that 1850, 1840, which I'll show that to you in the bigger chart here. In the 4-hour chart, have some downside targets here, 1855, and then you have that 1840, and then 18 and a quarter ish, and then of course 1800. And I honestly think, before all said and done, we probably get into this area here, 1800 to 1840 ish. Before all said and done, and then possibly base a little bit. To me, I'd like to see 2 or 3 days of just chopping around here at the lows, holding that 1855, and then starting to take out 1890, and then start to run up higher again. And then maybe we have a recovery in place where we start rallying going into the end of the year. Remember, we're only half into October, so I could see easily 2 more weeks of volatility, maybe even a big washout. I like to see a pop first and then a washout into these areas here, right into this 1800, 18 and a quarter-ish, and then start to recover and start basing and starting to move up, making higher highs and higher lows. So that's what I'm really looking for. I am looking for one more pop up. That's going to be a pretty good shorting opportunity. Take a look at the diamonds. As you can see, we haven't hit our downside target of the 1272 extension. We do have a little fib cluster here, and then below that, if we take out the 160, we should flush right to that 158. So these are, before all said and done, I think we're going to see these two areas met, hit our targets, and then let's see what happens after these targets are met, if we get some sort of recovery and start to bounce back up again. So we're definitely way below the 200 on the diamonds, which is the Dow Jones ETF. In the IWMs, this is our main culprit, guys. This is it. This is the index that's really taking everything else down, and then of course everything else happens along with it. 103 is really the target. We had 103.73, pretty close here. So that 103 target area, and then of course the 1272 extension, if we lose the 103, would be the next target. So you might want to write that down. Write down all of these targets, because it's going to help intraday if you're trading intraday. IYT, the transports, had a decent recovery back above the 200, but it is weak. You can see lower lows and lower highs. We can see distribution here in place. 1272 here, our targets were met. But if we do get some further selling, look for the 135-ish area to be our next target in the transport. So nasty selling going on, guys. Really nasty selling. And as you can see, risk happens very, very fast, and you really don't get an opportunity to short, because every time you look to get short, the market just gap open lower and pretty much stays that way. So it's difficult if when you're intraday trading, if you don't get any of these bounces or these bear flags in place. Last is the Qs. You can see the Qs here, 94-ish. We are at the 1272 extension. Will be our next target, which coincides perfectly with the 200-day moving average. So there's going to be some decent support here. So if we do get a big flush, I think that's going to be the target. And the targets that I've shown you in the last 4 indices, that's going to be where I think we end up. Now, we can overshoot, and then you would hit that 1618 retracement in the other indices as well. But let's look at the short-term targets that are in place. Remember, guys, the ES, we want to see it hold at 1855. If we lose at 1855, we're probably going to be into the 1800, 1825-ish area when all said and done. So keep an eye out. Now, watch what crude oil does too, because and the dollar, of course. If crude oil can hold and at least get some sort of retracement, oversold bounce, that's going to help the market in general, because there's a lot of stocks, oil stocks, that are weighted in the S&P, and that's going to help at least support prices in the short term. Okay, keep an eye on things here. Be careful. Use your stops. Remember, when in doubt, cash is definitely a position. Have a great day. We'll speak to you tomorrow. Take care, everybody.